Futures Radio Show, sponsored by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world effectively manage risk. For access to free educational tools and resources for the active individual trader, please visit activetrader.cmegroup.com.
Every day, traders and investors dive in to tackle the ever-changing markets to find opportunity. Futures Radio Show is your number one source for answers to the questions that all market participants want to ask. Veteran futures trader Anthony Crudele sits down with the most influential leaders and top traders in the industry. Now, here's your host, Anthony Crudele.
Hey everybody, thanks for tuning in for this episode with Anne-Marie Baiynd. Remember, new shows are posted on Mondays and Thursdays. You can subscribe to the show on iTunes and YouTube. If you're enjoying the show, please leave a review on iTunes. Before I play today's interview for you, I want to give a shout out to the great sponsors of Futures Radio Show: CME Group, Trading Technologies, FTSE Russell, RJO Futures, and Top Step Trader. To learn more about these sponsors and the important things they are doing for futures traders, be sure to click on their logos on our website. Today I spoke with President and Chief Technical Analyst at thetradingbook.com, Anne-Marie Baiynd. I kicked off today's show with asking Anne-Marie what she thinks about the current trading environment, why weekly charts are so important to her day trading, how knowing the macro themes have become an important part of her process, and last but not least, we discussed how we as traders not only have to adapt to markets, but we have to adapt our daily routines as we grow and change as people. So without further ado, let me take you right to the interview with Anne-Marie. Anne-Marie, what are your thoughts on the current trading environment?
Well, Anthony, I sit in the future space quite a bit, and so I like the major indices and also like the commodities, but I sit in oil and gold primarily. And the big things that I'm seeing, one of the things that I like to try to flesh out is, you hear euphemisms, and some of them are amateurs open the market and professionals close it. And so particularly in this kind of space that we're in that's really quite choppy, where volatility is sitting very low, if we use the VIX as the markers, the question is, hey, if we close at X, then the very next day, do we stay above X or do we fade? Right? How are we doing with the prior day's closes and the prior week's closes? And those sorts of things are really important to me as I look at the market right now, because it gets so very choppy. What I've started doing is looking at, let's take a look at the last 5 candles. Am I making at least a higher high or a higher low? And if either of those answers are yes, then I know it's essentially bullish, and my deep pullbacks, I'm going to find value buyers sitting in the space. And that works across any and all markets that we're looking at right now. A lot of breakouts fade, but our balances as we come into support are generally holding. And those are the kind of parameters that I'm looking at. And it's keeping me green largely with minimal risk every day and every week.
You and I have talked many times before. I just want everybody that's maybe new to the show and haven't heard our prior episodes on specifically what it is that you look at, and give us just the little bit about the technical strategy that you use.
Okay, so for a weekly chart, what I like to look at is the general range. And then because the market's fractal, that means it has copies of itself within itself, I look to the last week and I'll say, all right, we closed Friday at X. So wherever the market closes on Friday, we're going to look at Monday to see how it holds. Now, a lot of times there's always going to be that group of people that are the permables that go, okay, this looks great, I'm going to go higher. But if you can't break those highs, those are the things that make you go, all right, I started my week out at this area. I close the week just above that. Well, if I can't get above last week's close, I'm going to start dropping into the prior week's close if it's lower, or the prior week's open if it's even lower than that. So I really am always looking at it in terms of, think about walking through a stadium, like you're doing stadium steps. If we are steadily making one step up in front of the other, we know that even if it's noisy in between and the steps are different sizes, as long as we're moving up, any of my pullbacks down into that deep support are going to hold me. And if I use my week as a reference, the prior week, it's going to give me sometimes a really large trading range, but nevertheless a trading range where it tells me essentially buyers stepped in right here and sellers stepped in right there. And if you can look at it just simply as that, where did I open? Where did I close? And if I expanded through those edges, did I hold my open or did I hold that close? If that makes any sense.
It does. One quick question before we move on. Can you expand a little bit more and explain to everybody why the weekly charts are so important to you in your day trading, not just in your homework?
Yes, absolutely. Holding on to the larger, wider time frames, it keeps me out of trouble for these whipsaw tweets that cause crazy price action. Because at the end of the day, let's think about it this way. Big money can't move in and out all the time because there are too many transactional costs that they are going to have customers balk at and clients balk at if they see that amount of motion. Now, we do have high frequency trading and that pushes things around, but in general, big, deep pockets initiate into the market and then they hold the line steady and they say, all right, to whoever it is that's executing, hey, if it comes into this level on the low, this is where my risk is ideal. I want you to pick some up there. No matter what happens, just pick it up there. If it drops below, wait until it recovers, pick it up there. And so because I use these weekly and monthly charts, what I end up seeing is once I move away from initial support or resistance, any kind of whipsaw tweets that occur fall back into these value areas or spike up into the areas that are profit taking. And it has been really, it's like putting bumper guards around me. Now, granted, I miss some intraday motion that's very swift, but the one thing that it's done is keep me out of trouble and getting me in a drawdown situation that is uncomfortable to manage intraday.
Love it. Thanks for explaining that, Anne-Marie. Now, for anybody out there that wants to learn more about your technical strategy, like I mentioned before, you and I have done several shows together on Futures Radio Show. So people can go to futuresradioshow.com, click on episodes, search Anne-Marie's name, and look at prior episodes. But I want to continue today's conversation. And when I initially asked you about your thoughts on the current trading environment, you went very technical. Now, you and I both, we trade using technical analysis. That's our favorite thing to do.
Yeah.
But I'm curious if you've been spending more time looking into the fundamentals like I have. I mean, because for me, I could tell you that over the last several years, I have been allocating a lot of my time developing themes as to what's happening in the market. Are you doing something similar?
I absolutely am. And the biggest thing was the why, right? Because we're constantly on this journey of self-improvement and process improvement. If we work in the market, it's sort of a a byproduct of being engaged in the space, because the market teaches us something new every time we engage with it. And what I was noticing was, even though I was am a very good technician, I was still getting surprised by certain moves that appeared to be ready technically, appeared to be telling a story technically, but indeed did not. And the answers ended up being part of the macro view, and that was a place I literally had no experience. And so I just began to learn about that sort of thing, just really starting to read the big macro picture. How does this giant entity called the market, how do the strings pull on each other? What are the natural relationships? Now, we could see in the past that, hey, listen, market goes up, gold goes down, a dollar goes up, oil goes down. These sort of relationships that we used to see, right? Bond futures go up. We know the market goes down, but now we've seen all kinds of disconnects, right? The bonds and the dollar moves up. The bonds and gold move down, or all the kinds of things that we think should work, that work sometimes and don't work other times. It's really because of the bigger picture being pushed on us, and really the bigger picture moving the state. And so I've been studying the macro view for really the last year, engaging in, all right, what happens when we're in a deflationary environment? What is it that the dollar needs to do to keep itself competitive in the other space? What are other countries doing to manipulate their own currencies? And how does that affect the market? And so, because it's so big and so vast, I'll take a little chunk. And the first thing I started trying to understand is, all right, let me understand the bond market. Everybody says, hey, listen, the bond guys are the smartest guys in the room. They can usually forecast before us. And so I started learning about credit. And I tell you, that was the very best place to start. Because once you understand who's going for how much credit and at what cost, you start seeing who's at risk and who's sort of pulling the levers on risk to move things. And that has been a journey that has been difficult, because some of the things you read, you go, I don't even know what it is I just read. And so I'd have to read it over and over again. But getting those concepts down and understanding a little bit more about that relationship that economies have with each other has really been something that has strengthened my ability to hold into targets and to really keep myself a bit more calm as I take a look at the markets overall. I would highly recommend it. Most of us as technical traders, we go, I don't need that. It's big. Everybody talks about different things and there's nothing physical, but it's just the conversations they're having that let us understand more about what they're betting and what we can do because of those bets.
Hey everyone, I hope you're enjoying the show so far, but I want to pause and thank one of our sponsors, Trading Technologies. I started using TT in the year 2000, and I love it. It is by far the best trading platform I have ever used, and I've tried a lot of them. With TT, you can trade the global markets from virtually anywhere in the world. They are the world's fastest commercially available futures trading platform. I highly suggest you go try out TT, especially because you can try it for free. Just go to tryttnow.com and set up your account. What markets are you trading these days, and anything interesting that you're noticing in these markets that you're trading that you'd like to share with us?
So I look at the ES and the NQ. I do sort of look at the YM, but I don't trade it much. I just look at it to see how it's going. And then I'm always looking at oil and gold. And a few interesting things are showing up in the NQ. The big behemoths which have carried so much of the market share of the NQ up to where it is, they're starting to falter just a little bit. All the FANGs, and with the exception of Microsoft, that really has put some really good performance in. A lot of these others are starting to slow down a little bit. Even with Google's most recent report, it still is just coming to the base of the gap from the last earnings space. So the big behemoths, their ability to continue to rise is not showing the way it was, and there's a sector rotation that's occurring within the sectors of technology. And that I find to be very interesting. Some of the smaller spaces, semiconductors, and there's a new guard that is coming into play. Now, for me, I've been harping down the cybersecurity space. And so if you take a look, I think it's one of the places that we really are the most vulnerable and the least capable of protecting ourselves against this sort of thing. And it's sort of been a hush-hush space for us to keep rising. But I really think we need to look there, because that is a very, very sensitive space that could expand. And of course, that semi space. And so I see sector rotation there. For the YM, it has stayed much more range bound. The Dow futures, much more range bound than the ES or the NQ. So that really is sort of the canary in the coal mine to me, in terms of the ability for that group of 30 stocks to expand globally and nationally. It seems to be saying, I don't have much left in the tank. And then everybody in the world, it seems like, is banging the fist on gold. And gold is starting to move extremely quickly to the upside. So there's good and bad there, but any kind of parabolic motion has the opportunity to exhaust. But what you can see is that gold is rising as its own form of currency against the backdrop of all the other currencies sitting out there, the euro, the dollar, the lira, the whatever that you're sitting out there looking at. And now we're looking for gold, but we'd like to have a big pullback to get involved, just not sure it's going to get there as it continues to rise. And so those are sort of the key things that I'm seeing, and it's helping me position in other longer term portfolios, as well as my active trading during the day in the futures, which I love, of course, because of the leverage.
This is what experience teaches us, right, Anne-Marie? What I love about what you just said, and just thinking about a few things. One is you're doing more sector watching for the ES for leadership. Am I right on that?
Absolutely.
So that's an edge. So if you find a sector that you've been watching that all of a sudden is coinciding with what you're looking at in ES, that could help you with your execution.
Absolutely.
Then you have the Dow is more range bound. So in a way, that's an edge as well, because if you get to support or resistance and it stays in the same range that you're looking at on your weekly charts, you're like, you know what? The edge I see here is just keep trading this range. There's not a lot to break it out. And gold, because of macro things happening, you are saying to yourself, okay, also coinciding with my technicals, this is a bullish look. Wait for big down days, and maybe that's an opportunity to buy.
Absolutely. 100%.
And as we all know, Anne-Marie, it's a lot easier said than done, even if we have all that information. But what I want to talk about specifically with you is how you got to the point of developing that big picture process. Is it just experience, trial and error? Talk to us about that.
I'm an avid reader, and, I'm a perpetual student. And so I'm always taking a look. And really the biggest thing, Anthony, that I've learned to do over time, and it has taken really my entire trading career, to get to that space is not to dismiss anything out of hand. If somebody says something and the first thing my mind goes to, that's bananas, I will immediately stop and go, oh, really? Is it? Step back and validate why it is that you have that particular belief to someone that has got a totally contrary idea. They didn't get it in a vacuum. They're looking at something. How about you look at that? And so I've become a real student of not only technicals, as I always have been, but a student of the market, the big strings that pull on the market without making myself into a conspiracy theorist about, oh, the big whatevers, but really just saying, all right, if the belief structure is this for this group, why do they have this as a belief? Who has that contrary idea? And so I end up scouring the web and I read. I've been a speed reader ever since I had a recruiting company because you have to read thousands of resumes. So I literally speed read articles for hours and hours a day. And my brain takes in some and throws some out. Sometimes I have to reread, but that is really it. I pull it in, I read it, I say, okay, does this person have an agenda? What's trying to get sold to me from this article in terms of the concept that they have, and is there room with empirical data to validate that? So I'm always going back to that data set that says, all right, what am I seeing that may or may not validate this piece of information?
I love it. We're always students of the market.
Yeah.
It's absolutely, I don't say rules, but it's one of my instincts is to always be a student, because if there's anything we've learned, Anne-Marie, we're always learning. The market will.
That's exactly right.
Right?
Yeah.
Now I'm curious as to where you're going to do your macro homework. Can you share with us some of the resources that you're going to develop these themes, as I call them, in the market?
Okay, so the things that I try to read about at this juncture, I read the Asia Times. Very interesting writers. Now they come out of Hong Kong, and so what's going to be happening with them is going to be pretty important, because I just read, they've just moved. Chinese have just moved some more military into that space just on the outside of there, and I have no idea whether that magazine will be able to withhold the strength they need to continue to publish. But the people on there, they have complete free license to say whatever they want, and they're very astute. And so they were talking about what's going on with Iran, the end game with them in the Strait of Hormuz. And of course, I'm reading that because it helps me understand, all right, who's going to have to come in and help out with that? What's that going to do with oil, blah, 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 that kind of stuff. So I love it there. And really, the regular, ordinary publications are good for understanding the overall setup. But I got to tell you, I have been listening to the macro show that Hedge Eye puts out, and they, he's a guy, he's got that personality that you either love him or you hate him, but what he says is really very much data driven. We're in this space, so here's what happens in this space. When we're deflationary and we're looking for bond proxies, this is what happens. And you can just flesh it out with the data. And that overall view has also been very, very good. And they've got a free blog and then a couple of additional things on there. But it really is a space that says, hey, listen, think about what this means, right? So the big thing would be, one of the big things they're talking about is what's actually going to happen to the state of currencies if we do something like modern monetary theory, which says, hey, just print what you need. We'll just take out some loans for 30 years to pay it off later. you kick the can down the street, at some point somebody's going to go, I'm not going to lend you any of that money, or I'm not going to buy into the fact that you are actually going to ever be able to pay that back. So there's just, those are the two really interesting places that aren't the normal speak that you hear from regular television outlets, but look at things from a deeper data-centric space and moves out rather than here's my hypothesis and here's, I don't have a ton of data, but this is just what I believe. And you're not going to get any of that from those sources. You're just going to get data-driven information.
Yeah, Keith and the Hedge Eye guys have been on my show several times. I'm a fan of theirs as well. Good guys.
Great.
Yeah,
they really are.
Yeah. Before I let you go, Anne-Marie, are you doing anything to work on physical health, mental health, wellness, overall wellness to help you with your trading?
You know, that's been a struggle for me from day one. And because I sit on the autism spectrum, we've talked about that, I have a very conscious regimen of things that I have to do every day, or I am just physically prone to getting myself in a state of extreme anxiety or the inability to function. And so it is every single day, if I don't do something that says, all right, these are the things you have to do. You have to manage your breathing. You have to get up every 20 minutes. You have to make sure you drink tons of water. You have to have an exercise routine, and you have to take time away just to be still. If I don't have those in my space actively every day, in all, or at least in large part, I notice a problem with my performance. And as I get older, I have to tell you, sleep is one of those things that if I don't have at least 8 hours of it, I really lose an edge. And I never used to be like that. In my 30s and 40s, I literally could function on 4 to 6 hours for weeks and weeks at a time before I needed a day to rest. Now I've got to have it, or, I'm drooling on myself.
Hey, everybody. I want to take a moment to thank one of our sponsors, FTSE Russell. They are a leading global provider of benchmarks, analytics, and data solutions. The Russell 2000 Index is a key benchmark for small cap U.S. stocks. Be sure to check out the E-Mini Russell 2000 Index Futures, contract symbol RTY. For more information on FTSE Russell and their products, please visit FTSERussell.com. Yeah, I mean, like we are adapting to markets, we have to adapt to our changing bodies as well.
Yes, absolutely.
It's absolutely one of the most important parts of my daily routine is recognizing where I am physically and mentally, because if I'm not aware of how I am doing, and when I go to trade, I'm not going to be nearly as good as I want to be. So, Anne-Marie, you're fantastic. Thank you so much for coming on the show today. Where can people find you on Twitter, and give us a website to check out?
Always a pleasure to be on the show, Anthony. Great to talk to you. You can find me at Anne-Marie Trades on Twitter, and you can look for me on LinkedIn by my name, Anne-Marie Baiynd, Baiynd, and you can find me at the Trading Book, thetradingbook.com. And thanks again, Anthony. I look forward to seeing you really soon.
Anne-Marie, thank you again so much for coming on Futures Radio Show.
Take care.
Thank you for listening to Futures Radio Show. If you have any questions or comments for myself or my guests, please visit futuresradioshow.com and sign up to be a premium member for free. If you enjoyed the show, don't forget to leave us a review on iTunes.